Hello, everyone, and welcome to my gap trading series, Unleash Your Trading Instinct. We're going to be looking at Apple today, so we're always looking at Apple and NVIDIA. We want to show you how you can pull profits on a regular basis, just on a couple of stocks. Less is more, and let's take a look at our guidelines. This is our framework to make sure that we don't stray off the path and risk too much money, and that we are consistent with our profits. So let's jump into that slide right over here. So we always look for institutional participation. That's number one. So we want to have stocks like Apple, Amazon, Google. All of those stocks that have hedge funds and banks that are behind it. Visa, Johnson & Johnson, and the list goes on. And you want something that's fairly volatile, so you can get some price action. And then we look for the deal. So the deal is the closing price. The difference between the closing price and the opening price of the two candles there. You'll see a white space usually that is identified as a gap. We're going to see that in the chart here in just a second. And then the pattern. And today there was actually a pattern on Apple that we will discuss. So this is the secondary thing that we look at. Sometimes there are patterns that we like to trade, and it definitely shaped up today. So, but before we jump into it, let's remember our risk management. We never risk more than 0.5% to 1.5%. So you need to practice this, and you need to be quick at it to, especially intraday, to identify, if it's meeting those criteria. Here we go. Apple on the docket. Let's take a look at her. We had a gap up, right? And when it filled the gap here, so technically speaking, you may or may not have got into this, right? It was very, very close. So when we gap up and we come into the price down, we want to buy. So this is a buy setup. So this could have been an entry. It could have been. When we trade into a gap, this is a short. And that's how you have to, they flip and flop depending on which direction the gap is in. In this particular case, it gapped up. So we're looking to buy the dip in the morning, and it's the difference between the closing and the opening price is your gap. So you had this white empty space this morning that needed to be filled, and it did. So you may have got, what is the low here? 146.18. Yeah. So we like to get in at the whole number, 146.05, 01, 145.99 kind of thing. So most likely we would have missed the boat here, but you could see that it really works. Well, what is the high of this candle? 146.18, right? So 146.18. So this is something that you're going to have to get used to. It's very technical. So maybe you put, if we look at this example that we talked about in our last video here, that's why I say, you may want to have like two prices that you get in at. But it's definitely the opening and closing of that last, candle. I have it on the 15-minute chart is what I have it on right now. And just a reminder, this is not financial advice. It's for entertainment and education purposes. I'm just showing you how I trade the markets. Okay. And so this is debatable if you would have got it in here or not, but you can see how technical and accurate it could be. It literally hit the high of this candle by the penny, and then it took off. And so let's say you would have got in at 146.20, and then minimum is $1.40, so that would have been 147.80, right? The minimum requirement, you did not get it, the 1% that you would like, but it got there fairly close. This wouldn't have mattered if you didn't get in it, you don't chase it, but that would have been one setup. And then the second setup here is this is what I mean by when it comes down a second time to that number, it doesn't work as well. So if you try to get in here, it just did nothing. Now it's eating time off the clock. And most likely we're going to have a continuation downward tomorrow. And that's a pattern that you can trade. But the particular pattern I was speaking of at the beginning of the video, this is called a morning pivot, a morning reversal. And you can see that sometimes, in the opposite direction, where you have This is, this is that same pattern, but in the morning, right? So it's just inverted. So if we go back over here, you just have the inverted version of that pattern, and it's a morning pivot. In our short selling series, we talk about, we talk about breakdown candles, and this is definitely a breakdown candle. It closed below this one, and it would have been a short, but we'll talk about that in that short selling video. Okay, so you may or may not have got in, you may or may not have made profit today, but you can see that it works. You could have maybe got out here. As you're watching this video and you're getting to learn the strategy, it takes time. You need to watch them every day, because new things pop up. We talk about it. We learn a little something. We add it to our arsenal. We add it to our lessons learned, to our self-analysis. And all of that is available on my Patreon. You get a lot more attention there and the actual fundamentals of these two strategies for you to sit down and watch and learn. But so if you would have gotten out here, you're looking at maybe at a 60 cent, 70 cent profit, which isn't bad either. But that was the setup for today. So hopefully you learned something. Hopefully you're enjoying these videos. See you tomorrow.